Hello, hello, hello. What is it? Happy Wednesday already, everyone. How is everyone doing? The week already flying by. Good morning, Jacob. Good morning, Ro. Hey, thank you for putting in the news. Sterling, good morning, Patrick. That's not going to be a shocker. Tesla miss. That's more of a short squeeze, but that's actually Volkswagen's not getting the love from that. But I think that deal benefits Volkswagen a little bit more because they get access to Rivian software. It's actually really pretty good. Better than what Volkswagen rolled out in theirs. So they get access to all that software, even if Rivian goes away eventually. That's going to be an interesting sort of mutual partnerships there. Good morning, Sterling. What's this? Dollar index is chugging along. Yen is getting smacked down. Like it's the weakest it's been in 37 years, closing in on 40 years. What else? But see, most of the move on Rivian is from short covering. Short covering. Short covering. What else do we have? Oh, good. The tariffs are going to be inflationary. What isn't going to be inflationary at this point? And Yellen's so out of touch. Yellen's just so out of touch. I know she's not on the Fed anymore, but she got interviewed and she doesn't see. The prices at grocery stores really don't phase her. Only being worth $20 million. What else we have? Good morning, Martinez. Good morning, Jake. Good morning, Royal Palms. How again is everyone doing? All right, we had the mortgage applications out, mortgage rates. Again, nothing really strong there. We got new home sales coming out. We had building permits out, new home sales at 10 a.m. Eastern. And it's a quiet day going into tomorrow. We start the week off really tomorrow and Friday. EIA numbers coming out for crude. Crude still sideways, correction holding up, so I'll have to see if that changes anything. We have the bank stress test results out after the market close. Then remember, tomorrow we got the GDP, unemployment numbers, core PCE numbers related to GDP, so that's the quarterly ones. Don't mix those up with the Friday numbers, which is month over month, please. But Thursday and Friday are going to be really busy in the pre-market. Nvidia bounced yesterday, but pulling back again. Did Apple just get some kind of upgrade? Upgrades to buy from neutral price. This is all right. I don't even have anything to say. These price targets are absolute jokes. But doesn't matter what I think. FedEx, we had earnings yesterday. FedEx up. Revenue, if you look at the last few quarters, so revenues roughly stayed in line, but they've been doing a lot of cost-cutting measures, so they beat on EPS. So they've been doing cost-cutting measures to stay competitive already. And that's before we're in a recession, supposedly. What else? What else? Hey, Charles. No, yes, hit the thumbs up. We only have 3 thumbs up. Really? Only 3? Groups, let's just do a quick refresh. Barely anything positive. Industrials up 0.05. So 5 basis points. Defensive technology. So we had the little snapback rally for turnaround Tuesday yesterday. Now we're selling off a bit, but let's see. Again, I can't get overly positive or negative ahead of the numbers. Now, I would the bigger risk is to the downside at this point, going into Thursday, Friday. However, we got a schizophrenic market with any hint of good news or bad news, just buy the market. So any news, buy the market. Still, but at some point that will end. Still favoring a rate cut in September. Fear and greed still in fear. Market still freaking expensive. There we go. That's all you need to know. Again, FedEx was a beat and a pretty decent gap up. There, General Mills was a beat on EPS, but a miss on revenue. Remember, revenue is more important than EPS because EPS can be gamed. Revenue really can't be. I mean, you either brought the money in or you didn't. After close today, we have Micron. So let's see how that fares for the chips. Oh, we got BlackBerry too. Like that really matters. Remember when BlackBerry was one of the market movers? Remember when that was like, oh, what are BlackBerry's results? And then nothing. Ever since the iPhone, they really messed their business up. Uh, so that's where we stand there. All right. What do we have? So, I mean, we're almost, yeah, we're a little higher than from the contract roll, but not much. We had a little bounce. We hit up, we came up, hit that 50% harmonic, that 55.50 area, and then it's rolling down. We're coming back into short-term, very key support. So right around here, this 515, 516 area. The only thing, and then we go into another support area about 500 to 505, even 495 to 505. So, I mean, from the short side, it's getting a little tight with reward to risk. So we'll have to see with that ahead of the numbers tomorrow. But coming in here, even to 55.07 is another pretty key area of support. So I think you got to be nimble to the short side. But we triggered the wedge, came up, sort of kissed it goodbye. So we're gonna have to see if that holds. And that 55.50 is very significant resistance. Very significant resistance. So on any rallies, I'd be watching for topping patterns near there, 55.40 to 55.50. Especially with the numbers coming out tomorrow. Also remember from the daily perspective, we are at cycle bottoms, but this can continue to head down, especially if we break, because we don't have any turn up move yet. If we break below this 5,500, we could easily see a quick move back to 54.45, 54.50 if the numbers disappoint either tomorrow or Friday. On the weekly, we're still at the cycle top, divergence tops, I should say potential because it hasn't even gone back. And the weekly rotation zone is all the way back at 5,400. So I think the risk overall is to the downside, meaning that's where I'd be focusing, especially from a stop perspective. From the NASDAQ also coming up to the 50% harmonic and then turning back down. There is not a lot of major support in this NASDAQ. It already broke below this minor shelf from before, so 19,960 would be the first, so about 19,965 would be the key resistance on any bounce into the open, and then about 19,875 would be the next level. But on the larger time frames, there isn't a lot of significant support. Significant support. If we're just going to look at the little harmonics from here, if we see it here, the 50%, which just came down 19.9, which is bouncing off. So if we break below that on a closing basis, is going to be about 19,856 in the short term today. Then I just use the harmonics coming down. Let me put those back on just so everybody can see it. It's technically there, but it's see where we just bounced, the area we're just bouncing off. That's the 50%, but then it's 19, technically 850, and then 19,812. And this is why, since we're into an advanced clear path, I'd use the harmonics coming down. So that's what I'll be watching. The Dow, there's some pretty significant support right where we're trading. We kissed off the 87.5, couldn't sustain anything above it yesterday. You see, here's where I will watch some key highs and lows. A key high from last Tuesday, the low from yesterday, and retest of the low today so far. But if we break below that, the next magnet price is about 39,230. Key resistance is coming in at 39,690. The Russell, Looks like we're going to try to fill the gap from the roll contract roll. But about 2025 is the magnet price there. And if that breaks, we're really looking back down here at about 2007. To the upside on any rally, very major resistance is 2053. VIX still, after a pullback yesterday with the rally, still elevated, stair-stepping higher going into the numbers. I don't think we'll see a major VIX improvement potentially until after 7 or after the numbers are released, 7:30 Central on Friday, technically 8:30 Eastern. But so there's nothing to talk about there. The DAX still, we're rolling over, spike up between this key between the 50 and 62.5, making this little mini double top pattern. So 4-hour close below 18,252. If this follows through with the close, we could see a pullback, and this is valid because the first and second targets are within the move that started it. The third target is beyond the candle bodies, but it's still within the wicks. So we could easily retest the lows back from Friday the 14th of June. So that's what I'll be keeping an eye on there. Notes sort of breaking down ahead of these numbers. So the yields are climbing. Let's just take a look at the yields. But on any rally up, doubt this will really move beyond about 4.3 today. I would be shocked if we got anything above there. I think it'll stall out waiting on those numbers tomorrow. But the next key area is 4.32 and major support coming in at 4.2. Dollar index. So we broke out, came back rotation zone once, came back rotation zone again. You see, rotating back up. And we also, remember, back on the 20th of June, closed above that 62.5. So still the magnet price is 105.81. Dollar, by the way, the potential double, which never confirmed or triggered, which was a great trailing level, is off the table. So dollar still running. Now, conversely, let's just take a look at the other currencies. By the way, yen getting weaker, actually breaking above the yen intervention highs back from April 29th. So all that money from the intervention flushed away, selling all that gold, and U.S. Treasuries already wiped out. In what, 2 months? Goodbye. Let's just see if they try it again. 161.28. Their job owning obviously didn't work, but 161.28 is still the next key thing. Euro, the double bottom, again, never triggered or confirmed. Gone, triple bottom. We still have the magnet price from back when we closed below Friday the 14th of June, closed below there. Just a little slight rally, but still nothing to invalidate that magnet price of 106.40. Now we can get back to some of the stuff. Crude, working off, cycles going down. This is a fantastic example of a sideways correction so far. Now we still have EIA numbers coming out. But we have very key support here with cycles heading back down. Now, can we break this? But yeah, we can drop below 80.26, but 79.60 to about 79.30 is very major support. With burning off the overbought condition. So this is interesting. And basing above prior major resistance. So this will get interesting in crude. No close above the 62.5 yet, though. We're still in the rollover zone, but so far sideways correction. So even if the EIA numbers come out and it pulls back, I'm really going to be focused on this area right in here, 79.50. Gold, still nothing. Remember, the double, because of the extended base, is off the table. Now, that's still going to be a key area. Should it break below over the next couple days. But We're going into cycle bottoms, long-term cycle bottoms, so that will be interesting if it does break below it. Although then I'd use, if it did break below the lows from Friday the 3rd, the key area I'd be watching is 22.25 since we have no double in place. The upside, we still have to bounce, and there's no buy pattern just yet. We might be setting up for one tomorrow if we continue with the weakness today with a % buy. But then the first target I would utilize is this 23.80 area. And then above that, it'd have to follow through above 23.98 on a closing basis to really get the move on. Silver, not much to talk about there, still in the channeling double. All right, the good old Bitcoin, little bounce, little rollover. No major bottoming pattern just yet. Still watching to see if these lows hold. Since we did tick off that 87.5 rule, still watching to see if these lows hold. But overall, here's the cautious area. We still have the massive double top still potentially in play. Going to be interesting to see where this week closes, though, over the next couple days. Spiders. Spiders, 543.69, 545.33 is the major resistance area. 544.45 minor. We still have a gap. We're going to gap down today. So the first targets I would use for the gap would be 543.99 yesterday's open, and then the closing price, 544.83. Very, very major support around this 542.70. If that breaks, then you're looking at key support at 541. Then you don't have much until the bottom of the rotation zone, and there's still an unfilled gap. The Qs, 478.23, so the first thing would be the gap to 479.38. The magnet price on this to the downside is 476 area, and then kiss it goodbye is about 473.80. Nvidia, I'll get to comments in a second. Nvidia, we got the bounce yesterday. So that's where that technically a follow through with a % buy. But remember, Nvidia shifted to neutral on this move, so I'm more so watching for the next rollover play. Key resistance is still 129.40 if buyers try to rush in. Anything today would be for the gap fill to yesterday. I'm still watching for this lows to break. The lows to break, and we get the bigger pullback in Nvidia. What else do we have? We already hit 20K, Coco. Does Nvidia cross to 135 today? There's too much heavy lifting unless something shocking came out. The only thing that'll be positive for Nvidia is if Micron blows away earnings at this point. Also, we have the Philly Semiconductor Index. Coming back to the rotation zone, but this thing is massively overbought. With divergence tops, we have a triple divergent top on here. Weekly cycles at the top in semis. Even though you got daily closing in on the lows, we don't have a turn up move yet. So the only thing, if I was going to watch something, this has to perform the % buy like today above yesterday's high. Other than that, we'll be watching for this thing more so to continue a pullback with the semiconductors. And the key area in the short term for that would be this 50-40, which is the prior breakout zone and the 50% harmonic from the run up from the lows in April. Morning, Chris. Thanks for the thumbs up, Ted. Good morning, McRangers. What does the Mike Watch tool expect for rates? I think The Fed will be cutting on the short end, but I think there's going to be some kind of rate shock that's going to affect the longer term rates, like the 10-year notes and the 20 and 30-year bonds. I think there's going to be something that puts upward pressure on our yields on that. Which would be very interesting. That's what I'm expecting. Is there a pattern yet? No. It's still good morning, Richard. Wait for the patterns to trigger, especially with shorts, because you do get the secondary reactions and the trends are still up. There will be plenty of short opportunities in this market. Plenty. But again, don't try to call tops. Just don't try to call bottoms either. You're better to take the chunk out of the middle. You trade US 100. The NASDAQ 100. But it already hit 20K that too. And it's not going to hit 20K again today. You already hit your 20K call. Setting up for a really nice double top then. Just be a little careful in this market right now. We'll start getting a bigger pullback, then there'll be a great secondary reaction that will set up some potential long-term topping patterns. But could it keep marching higher? Yeah, that's why we wait for the setups. Yeah, many times, look, you don't need, let's take a look at the monthly. By the way, this is long gone. Didn't pull that off. But look at this. Let's even say it pulled back to the 16.5, which would have a lot of people panicking. You're going to get, but this prior major breakout area. We could get a pretty good secondary reaction. And then if you start setting up for topping patterns and come back down, break 16.5, watch out. But until then, look at the trend. You think this is just going to, I mean, yeah, could something happen in the world if nukes started flying? Could this just form a V-shaped top and kiss it all goodbye? Yeah, but you can't count on that. That's why you use stops. It gives you signs though, just like even with this, if you look at the monthly, look at the top area before. You see here we had a support base back from October 21, came back down, broke below it, and look, a retest of that key support, and then we broke down, and then the sell-off continued. So just using key stuff. Now what's here? Well, the first level support is back at 18,450. But that doesn't even do major technical damage. Literally, that would wipe out a 1 month's move. But again, everybody expects the market to keep climbing. You start chipping away at the 16.5 area and then bounce and then roll through that. That's when you start getting into some technical damage. But that's when, on a longer term basis, you can start looking for more shorts, from my perspective. Until that happens, look, here's the S&P. Look at all the massive support you have to get through to start getting into a really big sell-off territory. I'm not saying that can't happen. I'm very cautious. We have still topping DeMark patterns, topping Elliott wave patterns. But can they all get invalidated? Yeah. Did we have a potential double top of the S&P that just kept marching higher? Did it ever get close to triggering? No. Was it on the charts for a while as a potential? Yes. Would I be, no, shorting this market up here and trying to call a top? No. I'd rather wait for the higher probabilities to shift. Now, if we do get some sudden event, you'll still get secondary, unless the market's closed for an extended period of time, you're going to get secondary reactions. So you watch for those secondary reactions on the bounce plays, and then you watch for short setups. Just as like on this, you watch for still on the longer term. 3 week pullback, rotation zone, rotation back up. So what if we got a multi-week pullback in the rotation zone? We'd watch for the rotation back up, which would be the secondary bounce that could continue higher, or it could continue and set up a double pattern, or just stall out at that 50 to 62.5, which then a rollover from that is pretty bearish. So you're gonna get signs. Until then, even if we pull back with tomorrow and Friday's numbers, let's say the PCE numbers still shows very sticky inflation and the market doesn't like it. Well, weekly S&P, you still have major support right at this. So your pullback area, it stalled out at the highs here and then broke out. So that's going to be friggin' major support. Yeah, people will be, oh, well, we're breaking down. Well, we don't know, but you're still going to get a bounce at some point. Learn to be patient. You could trade. Hold on, you can trade. That's actually crap. Unless you're, you know what? You don't need a big account. You don't need it unless you're trying to do a ton of leverage. Most people don't trade the 1 minute charts. Actually, that's why a lot of people do fail because they try to trade that. Trade the micros. You don't need a huge account to trade the micros. You don't need it all. You can set up bigger positions. You can set up for bigger moves, or you just trade really small. Trade 1 or 2 micros with bigger targets. The micros were the best thing that ever come along. You know, the bigger patterns are easier to trade than the smaller patterns. All right, let's just see going into the open. That's going to be watching. If this area breaks back to that, this key support area, this 55.12 in the short term, because it looks like we got some selling pressure. Look at that negative. Oh, wow. There's a negative tick. That's the lowest tick since Friday the 14th. So that's a pretty negative tick compared to recently. So your very key resistance is about 55.24 to 55.25 and a half. You'd have to get above there before I'd be interested in looking at anything from the long side unless there's a bottoming pattern closer to 55.12. All right. That's where we sit for now. Everyone have a wonderful trading day. Remember, unemployment Thursday, GDP, PCE numbers tomorrow. Don't get caught off guard. Know where your targets and your stops are. And I'll talk to everyone later. Bye for now.